Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I've been asked to look at UK stocks. So many of you have asked me to do that on privately on the comment section and so on. So I thought, you know what, let's have a look at today's 5 different companies in the basically in the UK that are in the FTSE 100. FTSE 250, it's quite a lot of the companies in the FTSE 100 are very small, let alone the FTSE 250. So I'm only going to focus the one FTSE 100 stock companies that are Sharia compliant. Okay, I've also looked at Zoya just to put that together. So we've got 5 different companies, some which I actually own my portfolio, and I'll let you know which ones that they are. And some are basically you probably never heard of before. So I'll give you a brief introduction to the companies and then their financials, and then obviously it's up to you to do a bit more research if you're interested in any of these companies. The reason I like actually investing in UK based companies is because when it comes to dividend and things like that, we don't have to pay these 15% taxes, and obviously trading pound to pound is actually easier than obviously paying for the FX and exchange or all of that stuff. So it is really nice to have you in your portfolio some UK based companies. So I put a little bit more emphasis in the last, I don't know if you guys have noticed, but in the last few months I've been buying more of the companies that the UK based companies that I own, apart from Unilever. I've been buying here and there every week, and basically every single month that I've actually given you like a overview of the things I bought. Majority of the stuff that I've been buying with like UK based. However, I'm still not where I want it to be, so inshallah I'll be adding more to these companies as we go along. So let's talk about these 5 companies before we get any further. And the most important thing for me, like I've always said to you guys, it takes a lot of time to do this research to put it together. So it would be really nice if you can just press that like button right now, because it genuinely helps the channel. And if you want to join us on the Discord, that also helps the channel. You've got a lot of things that you can actually have access to. You can download the Sharia compliant and invest in ebook. You've got all the trackers in there, and then you've got Discord community that you can actually join, inshallah, if that's something that you're interested. As always, you know, I'm not a financial advisor. I do appreciate all the basically kind words that you guys have given me, but please always do your research, okay? Please, it's really important. So what are we looking at today? We're looking at the ticker symbol, the company, the market cap. The market cap kind of helps us to understand how big the company is. And, you know, some companies are just like local companies and some companies are worldwide companies. So a lot of the companies I'm going to talk about today are slightly on the bigger side. We will look at most basic ratings. Okay, this is basically if these companies had a competitive advantage, they would have a wide economic moat, narrow or none, and so on. And then price currently, dividend yield, the payout ratio. The payout ratio would tell us whether the company has enough money to cover that dividend. Dividend streak, basically how long that dividend is being paid. And then stable. So on Simply Wall Street, they have something called stable dividend. So I put it, basically we're saying, is it stable, yes or no? Okay, then profit margin, we look at the free cash flow, we look at the forecast annual earnings growth for the next 1 to 3 years, and we look at the revenue growth as well, and then we look at the Simply Wall Street valuation and their fair value price. So a lot of this information comes from this website, and the first company we're looking at today is Croda. Croda International is basically engaged in fragrances, flavors, as well as the basically seed enhancement. A lot of the products this company makes, they are in the material, and their product is actually used to make some of the shampoo and things that we use, or fragrances that we use, that like Unilever actually uses this company to make their own product and so on. So they have links with a lot of companies around the world, and they're not just based in the UK, they're based in Europe, Middle East, Africa, North America, Asia, and Latin America, all of these different countries. So or continents and so on. Now, like I said, that's the first company. They currently have a market cap of $7.7 billion pounds. So it's not that huge company. Okay, it has a narrow economic moat. The current price is £55. Now, in terms of dividends, almost to 2% dividend yield, which is quite decent. The payout ratio though is quite high, 78%. So this is according to Simply Wall Street. And dividend streak, basically they have increased that dividend over 10 years. Now it is stable, and they do have a profit margin about 10%. The free cash flow right now is 196 million. Now remember, these companies, some of these companies are very small, so that's okay to cover the dividends. They could reinvest in the business and so on. Okay, basically they're expecting the earnings to grow about 16% and revenue to grow about almost to 5%. Right now, according to Simply Wall Street, is actually overvalued by 38%. Okay, overvalued right now. So $40 is basically where they think the price should be. So that's about £15 higher than where it is currently. The next company we were going to look at today is Sage Group, and Sage Group is a technology company. It provides technology solutions and services for small and medium businesses in different countries. They have accounting package that a lot of the accountants out there use, okay, to do their basically daily jobs. In terms of basically market cap, we're looking at about $10 billion, 10 billion pounds right now. It has a narrow economic moat. The price right now is £9.70. Now dividend is a 1.9, so almost 2%. The payout ratio, it seems actually very, very high, 91%. This is more like a REIT, to be honest with you. Like a REIT, real estate investment trusts normally have this sort of payout ratios. That's very, very high. In fact, let me just quickly check. Let's go to dividends. Yeah, 91%. That's very, very high. Okay, dividend streak, we're looking at about 10 years plus. Okay, so they have increased this dividend for about 10 years plus. And then dividend in terms of stable is actually, apparently it is stable according to them. Let me just double check that. How could it be 91% payout ratio and then be stable? Oh, there we go. Yeah, it's stable and it is growing. So both of them are in the green, and tick greens has 10 years plus. Dividend payout increases over the last 10 years. Okay, maybe they would obviously do have enough cash to cover that. Dividend it is stable as well. Profit margin is about 10%. Free cash flow of 200 million pounds, and they're expecting the earnings to grow about 18% in the next basically 1 to 3 years. Revenue about almost 8%. It's 17% overvalued right now. £8.29 is basically where the price should be. As you can see here, it's about £10 right now. Now the next company that we're going to look at today is one that I own in my portfolio, and a slightly bigger company. That's Reckitt Benckiser. This is one of the consumer staples company, one of the very well-known products out there. And during COVID, at the beginning of COVID, this company has done really well because they sent all the stuff that we needed at that point. Market cap of £41 billion. It has a wide economic moat. Price right now £57. I'm down a little bit. I think I'll show you in a second. This is one of the companies that I own. Like I said, the dividends are actually healthy, 3.21%, which is really nice. The payout ratio, we're looking about 60%. They have increased it, so 60% is not bad. Okay. Dividend streak of 10 plus years. Dividend is stable. Profit margin about 15%, and free cash flow of £2 billion, which is really nice for a company that has a $41 billion pounds in market cap. Forecast is about 7% for the next year in terms of earnings, and in terms of revenue, we're looking at about 3%. It is undervalued at the moment, hence why I've been buying this company for the last few months. Okay, so right now they're saying it's about £70 per share. That's where it should be. Right now we're looking at about 19% undervalued. So I have been buying this company every single month, and whether it's 2 shares, 3 shares, I've been adding to it, and I want to build at least 5 to 6% basically in my portfolio, just like what I've done with Unilever. That's the plan for this company, so I will continue buying it as well. The next company we're looking at today is another basically company that I included in the portfolio not long ago, and I believe this, in terms of market cap, I think this is the biggest in the FTSE 100, $165 billion market cap. It has wide economic moat. £170 per share is where it is right now. In terms of dividend, we're looking at about 2.2%, which is very nice. Payout ratio quite low as well. I thought it was lower than this. Let me just double check that. Oh, it's higher than that. That's interesting. Okay, am I looking? Yeah, 73%. So this is wrong. Okay, that payout ratio should be this here. Okay, it should be 73%. Okay, I'm glad I checked that. Okay, 73%, and dividend streak is about 23 years in a row, and they have a stable dividend. Profit margin, we're looking about 19%. Do you know what? Let me just double check this. I think this comes from maybe morning as Simply Safe dividend. Maybe I didn't use. All right, let me just double check this. Here we go. This is the reason. So if you go to Simply Safe dividend, okay, you go and click the company names, AstraZeneca, you can see it's 2%, 70% safety, and if you scroll down, you will see payout ratio of 41%. Now there is a slight difference, and this is why I don't like researching UK based companies using any other website other than Simply Wall Street, because they do seem to have a lot more, basically a bit more relevant to the UK. So I will use this. I will say 73% right now, but I have nothing to worry about when it comes to that. Okay, so that should be, let me just change this because it's not fair. And in terms of stable, this is actually stable. Profit margin about 18 and 14%. They do have cash, and that's about 6.56 billion US dollars. Even here, okay, even here they will show you in everything in dollars. So if I click free cash flow here, you can see is about 12.3. You can see this is 2023, so it's around here about $7 billion or so. But according to also Morningstar, is about closer to $7 billion in terms of free cash flow. Forecasted to be about 18% to grow in terms of earnings, and in terms of revenue, looking about 7%, which is really nice. And this is what attracted me to this company. Even if you go to Seeking Alpha, you'll see in terms of forecast and revenue is actually quite decent. Some of it is actually double digits, which is nice. And right now, according to Simply Wall Street, it's actually down about 35%. $164 per share is basically where they think the price should be. So if you click valuation and scroll down, you will see, okay, there you go. That's basically what they expect in the where they expect the company to be, but basically intrinsically. So that's the last one. Sorry, the fourth one, and the last one now is a company called Halma. This company provides technology solutions in the safety, health, and environmental markets in the United States, mainland Europe, and United Kingdom, as well as obviously Asia, Africa, and Middle East, and internationally. So going back here, you can see it's 8.1 billion market cap, and it has a narrow economic moat. Right now, it's about 21 pounds per share. Dividend yield just closer to 1%. Payout ratio only 33%, which is quite nice. And 17 years of increase in this dividend. It's not stable right now, and profit margin is about 13%. Okay, stable basic means they might cut it anytime soon. So that's all that means. Okay, profit margin about basically 13%, and they have a free cash flow of 212 million, forecasted about 9% in terms of growth side, earnings side of things, and in terms of revenue, we're looking about 6%. Now it's overvalued according to Simply Wall Street of about over 30% right now. So it's about $16 where they expect, £16 where they expected the price to be. Right now it's about £21. So there is 5 different companies. It's important that you go away and you don't do your own research, but I do own these 2 companies here. Croda was the only other one that I've considered adding to the portfolio a while ago, but it seems a little bit overvalued, so I would wait for it. If it hits maybe 50 or 49, $50 pounds per share, I might look into it, because in terms of the material side of it, I like the stability of this company, the products that they sell, their customer base, and so on, and the fact that it's actually, if it comes down quite a bit, then I might actually look into adding to my portfolio. So final thing I want to show you is from Sharia compliance side of things. As you can see here, Croda, all of them actually in terms of Sharia business activity side of it is absolutely fine. In terms of interest bearing, the highest one right now, about 21% is RB or Reckitt, and then interest bearing securities, basically they're all absolutely fine. There's no issues with that. So according to Zoe, obviously that information is absolutely fine. Now, one thing I would definitely say to you guys, if you're interested, just go to, for example, a website like a HL, for example, or even go to the basically London Stock Exchange website, and you'll find all the companies in there. Then you can actually find the ones that are Sharia compliant by just going to Zoya, just type this ticker symbol, and you will find whatever you're looking for. There's 100 different companies here doing all sorts of things. Crowd is one of these companies there, and then Experian, I think, is another one that we talked about not long ago, that's also Sharia compliant last time we checked. JSK, I don't think it's Sharia compliant right now, but it's a very interesting company. They did spin off not long ago between this Halen is actually one spin-off of this company. So this now has the consumer section, and this now has just the pharmaceutical section, just like what J&J's done right now. Recently is they've done exactly the same thing. Halma is also there. So there's a lot of different companies, but you also have Imperial Brands, all the tobacco companies, alcohol companies, loads of rubbish companies in there in the UK. And this is why I'm not really genuinely interested in a lot of these companies, because either they're not really a good business, they're not making enough money, okay, or they are basically not Sharia compliant, and a lot of them have a lot of debt. So you really have to be careful. So ones that I own is like Rio Tinto and RKT or RB, for example, whatever, and Unilever and so on. So the big ones that have like a worldwide market, those are the ones that I actually like. So there's a lot more if you want to have a look at it. There's Unilever, and some of them might not be Sharia compliant, so just be aware of that. And please always do your research. Don't rely on just what I'm basically sharing here. If you haven't joined us on the Discord, please do so. If you haven't liked the video, please do that, because it takes a lot of time and effort to put these things together. For transparency, you can see I own 21.4 shares of AstraZeneca. I do own what else do I own that we just talked about? Here we go, RB, so also 56 shares. And like I said, I'm actually going to build this to at least a minimum of 50 shares, inshallah, before it bounces up. I'm sure it will at some point. It's about 5% down right now, so not a lot. And AstraZeneca, I will definitely be adding to it as we go along. It's only 6% down, so I'm happy with my positions, and I'm going to continue doing that, inshallah. I hope you're enjoying this kind of content. If you are, please obviously like the videos. Let us know if you have any questions. Have a wonderful day. Assalamu Alaikum.